the How To series, brought to you by the Women's Business Center of North Alabama.
I'm Tim Knox. I'm a local entrepreneur, and in this installment of the Women's Business Center How To series, we're going to talk about cash flow. How to know how much money you need to start your business, how much money you need to run your business on a monthly basis, and how to know how much money you need for the long term. So let's just start at the beginning. A lot of entrepreneurs, especially newer entrepreneurs, don't really have a good idea of how much money they're going to need to start their business. You've got a business idea, you kind of know what you want to do, but until you take the time to sit down and really write out a list of things that may come into the cost category, you're not ready to start your business. So let's talk about that now. The first thing you should do when you're starting your business is just sit down with a pad and paper or an Excel file or a Word document and make a list of everything you can think of that's going to cost you to start that business. You may be a one-man or woman show, so your costs are going to be less than someone opening a retail establishment or doing manufacturing. But even if you are a one-man or woman show, you've got to think of those things you're going to need. The best way to do that is with a list. First, let's talk about your office space. Now, you may not need an office. You may use your kitchen table, a corner of your bedroom, and if that's the case, your startup for the office is going to be zero. However, if you're going to be looking at a commercial space, there are some things to consider there. Typically, with office space, you are going to have to do a deposit. And you're going to have to do this with a retail space as well. A deposit typically will be first and last month's rent and maybe a third month for security. So if you're getting an office that's going to run you $500 a month, you're going to have to come up with $1,000 to $1,500 for a security deposit. So keep that in mind. You may want to go into an office center. Now this is an office center like Apex, some of the others, where you pay a monthly fee and the office is all set up for you. You don't have all the other costs that go with it. So that's something to consider too. Again, we're trying to come up with all of the costs for starting your business. So if you are the one man or woman show, maybe you're going to have an office, maybe you're going to work from home. Some of the other things you're going to need, well, every business now needs a computer. It's very hard to run any business without a computer. Now, computers have come down in price. You can get a good computer for $300 to $400. Now, that is a basic computer that will let you surf the web, run Microsoft files, Word, Excel. If you're going to start a business that requires a more a fancier computer, let's say you're going to be in the CAD/CAM business or modeling or something like that, your computer cost could run as high as $2,000 or $3,000. So tailor the computer to your business. Another thing to think about is office furniture. If you're going to work from home, you're okay. But if you're going to have an office, you may need a desk, you may need a computer table, you may need guest chairs. Office furniture is not cheap. You may have to allow $1,000 or more to get all of these items. Start simple. Don't go out and buy a $1,000 desk. Go get the cheapest desk you can find to start your business. I've seen businesses started on milk crates with a door for a desk. So don't go crazy. If you can keep your budget for office furniture under $500, you'll be doing okay. So these are just a few of the things you're going to need to start a home business. Don't forget your marketing materials. Business cards, brochures, any kind of collateral, those all cost money. Now you can go to a local printer, you can use an online printer. You're going to save a little money doing that. I personally like to work with someone locally that I can walk in and see them. That is a big thing when you're an entrepreneur, is building these relationships. But get your business cards, get your brochures, and one really quick aside about business cards. Your business card should have your name, the name of your business, your contact information, and add some incentive, add a discount. When I give you my business card, most business cards go in the trash. But if I give you a business card that says free consultation or 10% discount, it's an incentive for me to keep that business card. So keep that in mind as well. Before you do your business card, do some research about what should go on there. So for business cards and brochures, you can easily spend $200. Okay? Again, keeping all of this in mind. About a website. It doesn't matter if you're a home business, retail, whatever. Every business needs a website. Now, you don't have to go crazy and spend thousands of dollars on a website. You can go to GoDaddy.com, Yahoo, eBay. All of the big websites now offer custom-made websites that you can get for a few dollars a month. Okay, you're going to have to register a domain name, and that's a whole training video in itself. You're going to have someone host your website. But the good news is you can do all of this now for $20 a month or less. Okay? And there are other things that may come into play. You may want to spend some money on joining networking organizations, BNI. You want to join the chamber. So again, put all of those costs down. Joining the chamber is probably going to average costing you around $200 a year. All right? It's going to be more depending on the size of your business. So you can see right now, if you are a stay-at-home mom and pop business, you're going to have a number of costs that you've got to come up with. And again, the goal of this is to sit down and come up with all of those costs so you don't get caught by surprise later on. So this is just if you're going to work from home. Let's look at the numbers if you are going to do something a little more fancy in the commercial world, either a retail establishment or a manufacturing, or maybe you need a larger office with employees. A lot of things to think of. Again, the first thing is the office space. And depending on the size, depending on the location, offices will vary anywhere from a few $100s a month to thousands of dollars a month. Office space, again, you're going to be required to put down first and last as a deposit, as well as the current month. So let's say you are going into a retail space that's going to cost you $1,000 a month. To start off with, that is $3,000 to get in that space. Now let's look at the numbers if you are opening a commercial space or a retail space. You're going to have the same cost as you would in a home business, but a lot more. So let's look at those really quickly. The first thing, of course, is an office lease. Whether it's an office, retail space, commercial space requires you sign a lease. It's usually going to be 3 to 5 years. Never sign a lease without having an attorney read it first. Trust me. But they're always going to do first and last, as well as the current month. Office space can run you anywhere from a few $100s for a small space to thousands of dollars, tens of thousands of dollars for a larger space. We're going to think, just for this example, it's $1,000 a month, so immediately that's going to be $3,000 that you have to come out of pocket with. A few of the other things that go along with your office, how about a phone? You don't have to put down a deposit for a phone, but you will have to establish the account. This is going to be a monthly fee we'll look at in just a minute. Now, utilities. Most utility companies are going to require you to put down a deposit. And the way they figure that is they look at the last 12 months space charges for that electricity in that space, and then they average it out. For example, if that space, over the course of a year, the electricity costs $6,000, you're going to have to put down a $500 deposit. That's $6,000 divided by 12 months. So you are going to have a deposit. If it's a large retail space, your deposit alone could be thousands of dollars. So check that out. Make sure you put that in your budget. Other things, how about, we mentioned computers, office equipment. Maybe you need displays. Maybe you need racks. Maybe you need slat walls. You need to budget that very carefully because that's going to be thousands of dollars. Okay? So take a look at what you need. If you need 1 computer, 2, 3 computers, if you need multiple desks, if you need displays, you've got to list all of that out and make sure you put a dollar value on that. Okay? For, let's say, a small retail with displays and everything, you may have to come out of pocket $10,000. And that's not an exaggeration. Most display cases will run you $400 to $500 a piece, and then your office space, etc. Other things you're going to need. Of course, we talked about the business cards, the brochures, all of those collaterals, you're going to need those. But you're also going to need to budget for things like your grand opening. You know, the old axiom, if I build it, will they come? No, they won't. You need to do some advertising, some marketing. That may be radio and TV, that may be newspaper, it may be something as simple as printing flyers and going through the neighborhoods, but you are going to have to budget some money for your grand opening. Other things to look at, of course, employees. the expenses that go along with them. If your business is going to have employees, maybe they have uniforms. Maybe there are other expenses you need to think of. Make as long and detailed a list as you can. This is barely a scratch of the surface. Tell you a really quick story about one of my businesses. We were well into opening the business. We were about 2 weeks from opening the door, and I realized I hadn't ordered my sign. Okay? The sign cost $5,000, which was not in my original budget. I thought I could get a sign for $1,000 or less. So I should have done my homework. I should have called the sign guy and got the estimate early. So that was a $5,000 surprise that you don't want to go through. But you want to make as extensive a list as you can and list everything that may cost you to start that business. Do you need specialized equipment? Are you going to go in the videography business? Well, you're going to need cameras, you're going to need lights, you're going to need microphones. That sort of thing isn't cheap. Are you going to go in the auto repair business? Well, you're going to need tools. You're going to need a long list of things. So whatever your business is, sit down with that Excel file or a pen and paper and make as extensive a list as you can and give everything a dollar value. Because the last thing you want to do is budget $5,000 to start your business and then realize you need $15,000 or $20,000. Okay? So make as extensive a list as you can. Keep in mind things like insurance, license fees. You can't start a business without getting a business license. Go through the list, make sure you cover everything to start up your business. Now we want to look at what it's going to cost you to stay in business on a monthly basis. One thing I've seen a lot from entrepreneurs is they don't have a really good handle on what it's going to cost them to stay in business month in, month out. They don't have a good handle on their cash flow. Cash coming in, the cash going out. So what we want to do is just look at a typical month in a typical retail business and let you see what you've got to pay. Now the way that I've always done this is I have a calendar, and I know on the first of the month several things have to be paid. Rent may be due on the first of the month. Payroll may be due on the first of the month. There may be other bills, but maybe I can space them out a little bit. In my business, I paid payroll on the 1st and the 15th. So that told me on the 1st, and we're just going to use round numbers here, my rent, let's say, was $1,000 a month. I knew that I was going to have $1,000 to pay my rent on this date. Payroll in your business, again, let's just use round numbers. Let's say your payroll, if you do it every other week like I did, let's say your payroll was $2,000. Again, that tells me on the 1st of the month, I've got to come up with $1,000 for my rent, $2,000 for payroll. All right? 15th, I did payroll again. Another $2,000. Now, in my business, we were a retail business, so I had to pay sales tax. That always came due on the 20th of the month. And where my business was located, I would have to pay 8.5% sales tax, meaning whatever my gross revenue was from the month before, I had collected 8.5% for sales tax, and I had to submit that. So let's say I did $50,000 in business. 8.5% of that is roughly $45,000 or $4,500. Let's just say $4,000 just for round numbers. Okay. So I know on the 20th of the month I have to send the state a check for $4,000. And a really quick point here: the state and the IRS, they want their money on the date it's due. If you do not pay them on that date, they have no sense of humor. So keep that in mind. Other things. I'm doing payroll, so I have to also do payroll taxes. Now, we won't go into that deeply here, but you have to do withholding from your employees. You have to match certain parts of the withholding and then submit those to the government. So let's say my withholdings for the previous month, I owe $1,000. And again, these numbers may be a little off, but not by a whole lot. So let's look at where we are. On the 1st of the month, $1,000 rent was due, a $2,000 payroll. On the 14th, my withholding was due. On the 15th, another payroll for $2,000. On the 20th, I did $4,000. Now, this would be great if this was all the money that went out of the business. But I also had things like the phone. And my phone, I had the internet phone cable bundle. It was about $200 a month. I had inventory costs. And in my business, I was ordering inventory on a weekly basis. But let's say my inventory costs were $20,000. And again, this is not far off on the numbers. Other things, I always had insurance. Okay, liability insurance, that was a couple of $100s a month. I did some marketing. And on average, I would spend anywhere from $1,000 to $3,000 a month on marketing, running TV, radio, that sort of thing. Other things, miscellaneous costs. There's things that always pop up. For example, we had a break-in in one of the stores, and I had to replace a front window. That was something I hadn't counted on. That was $500. So for miscellaneous, you can always count on miscellaneous costs on a monthly basis going anywhere from a few hundred to whatever. We're just going to put in a safety pad there of about $500. Again, these are things that are going out the door. Whether I make a nickel or not, these are things that are going to be going out the door and I have to account for. And again, your milestone dates are the first, for me, 1st, 15th, and 20th. Now, you may do payroll on a weekly basis. You may just pay commission. That really doesn't matter. The equation is going to be the same. Other things involved in here, expenses. Maybe you do an auto allowance. Maybe you pay mileage. Lots of expenses. But you've got to sit down and look at this on a monthly basis. So if we tally this up, 3,000, 23,000, 24,000, 26,000, 26,400, 30,400, 31,400, 31,900. Think that's close? Okay. That's the amount that would go out of this business this month if these numbers were genuine. Now you have to look at how much are you going to make. If your business isn't making $31,900, you're going to go in the hole. Let's say, for the sake of this example, you did $50,000 in revenue last month. Okay? Typically, the way we would look at it is we would deduct our inventory costs from this immediately to help us get our gross margin. So let's say if we took out that $20,000 in inventory immediately, we're already at $30,000. All right, so we're going to take the inventory number out of here, and that brings that down to, is it 11,000? Okay. Now, out of this 30,000, I have to pay all of this stuff as well as pay myself, any other costs that may have been incurred. So if I deduct out, let's just call this 12,000, just to be round numbers here. Okay, that's going to leave 18,000, and you may be doing a happy dance now because you think you've made $18,000. There may be other things that come out of that. Let's think about this. What if your inventory cost wasn't 20,000, maybe it was 40,000, which is again not unusual. If that's the case, if you have to take out another $20,000 in inventory, you are now in the hole. Okay? So it depends on what your profit margins. In the business that I was in, our profit margins were around 25%. Just to make that a more accurate number, let's say we did the 50,000. All right, 25% of that is 12,500. Okay, so we were on a 25% margin. So after I paid for my inventory, that's what I had to pay all of the other costs to get to my net margin. Now in my business, net margins averaged around 10%, which is where we would want to be. But again, if we had a month where we didn't make this much money, we still have pretty much the same costs going out. All right? I'm going to have the same rent, whether I have a good month or a bad month. I'm going to have the same payroll. I'm going to have the same phone. Always going to have the 941 tax payments. Again, rent, insurance is going to be a constant. The 20th is going to be my sales tax. So you're always going to have those fixed costs going out every month. And unless you've got a really good handle on them, you may be surprised one month to find that you have more month left at the end of your checks, meaning you don't have enough to pay it. So as your business goes along, once you are established, it's very important that you create a file like this. And again, I use Excel. A lot of people use QuickBooks, and keep up with exactly what your outgo is going to be on a monthly basis. That way, you never have a surprise at the end of the month. The last thing we want to talk about is creating a budget for the year. We've looked at what it's going to cost you to start your business. We've looked at what it will cost you on a monthly basis to stay in business. Now we want to talk a little bit about projecting it out for the full year. And the way you do that, the easiest thing to do is just with Excel, which is a software you can use to do the spreadsheet. You can use any kind of spreadsheet software. But what you want to do is create a budget for the year. And quite simply, you put it out on a monthly basis. And I won't go all the way out here, but you have this. And then down this side is where you list the things we talked about earlier, the monthly expenses. You want to break those into two areas, income and what I call outgo or cost. Okay? So how are you going to receive income for the month? It may be through sales, and that can be direct sales, sales on your retail floor. Maybe you have internet sales. We talked earlier about having a website. You should be selling on the website if your product lends itself to it. You may have agents out there selling for you. There are any number of income categories that you would list here. And then what you do is go out on a monthly basis and you fill these in as best you can. Now, with a projection, a lot of it is guesswork, but you can go on historical data if you have historical data. For example, let's say in January, the direct sales off the retail floor brought in $25,000. All right. Let's say in January we did another $5,000 off our website, and then our agents or brokers brought in another $5,000. Okay. And then we have a total category there where we can total things up. We can see in January we did $35,000. Okay. Now we look at the costs that went out in January. And this is where you list again things such as your rent, phone, utilities, insurance, etc. And I also like to keep my payroll costs separate from this. You can create another one here, call it payroll expenses. It is all part of your cost, but I like to keep that broken out so I can see who's making what or what it's costing me to do what. So again, you just go back through. Let's say in January our rent was $1,000. Our telephone bill was $200. Our utilities were $500. My monthly insurance bill ran me $200, and you just continue down that list. And what you do is at the bottom is you take your total cost, and down here you have or your total income, and down here you have total cost. Let's say my total cost was $20,000, and then down here you have, of course, what's called the net. Now, what does doing this mean to me? It means that I can take a very quick look at what we did in this month, and I can compare it to other months. So income-wise, here are the numbers I did in January. My cost category, here is this. My payroll taxes, everything associated with payroll, I always pull out separately just to see it, and that'll tell me right here what I've done in January. What I want to do is project this out for the whole year. Now, again, some of this is just guesstimates, but if you've got some data to base it on, it's always good. So you can go out here and say, okay, in February, I think we're probably going to do about the same. Okay? Put in that number. And you may be in a business that's seasonal. You may do more business during the summer. You may do more business during the winter. So during those months, you can increase your projection a little bit. Now, don't go crazy. Don't say, well, I'm going to double my revenue in March. Say something like, well, I'm probably going to do 10 to 15% better, and you can increase the number that way. You know, this is going to vary from business to business. You may have fixed income every month. You may have, let's say you're in a business where customers pay you on a monthly basis. If that's the case, all you have to do is say, okay, I've got 50 customers paying me $100 due in March. That's going to go in your revenue side. Okay, so you can delve it. Let's say the internet is going to be the same. Again, you could just carry it on across. But the goal of the exercise is for you to come up with a 12-month spreadsheet that shows every month's activity. And very rarely do these numbers work out exactly. But what you do is at the end of February, you look at what you projected and then you go in and plug in real data. So now you've got a real idea of what you did. And it's always interesting to look at what you project and what the realities are. And once you do that for a few months, you should be able to adjust all these months a little closer, so every month you're almost getting there. But the importance of doing this is, again, to eliminate surprises. If you look out in March and you see that you're going to have to come up with $40,000 to cover your bills in March, and it's January, February here, it gives you time to create a plan. Okay? In March, my revenue is going to go a little higher. My cost is going to, if it's going to stay the same, great. In some instances, your cost may go up. All right? You may be in a business that when your business goes up, your cost of delivering the business, for example, a car wash, your water bill may go up. You may have labor costs that are higher in the summer. So you've got to plan for all of that. But again, the purpose of this exercise and everything we've talked about today is to give you a handle on where you are now, where you're going to be on a monthly basis, and where you're going to be on an annual basis. Again, this is one of the most important steps you have to take in your business, and one of the steps that a lot of entrepreneurs miss. You know, some entrepreneurs don't want to know the numbers. It's the old no news is good news attitude. Totally incorrect. You need to know these numbers to make sure you've got the money to start. So to sum up, you need to get a handle on how much money do you need to start your business. Are you a one-man, woman shop? Are you a retail establishment? Are you a manufacturer with 500 employees? Knowing how much money you need to start that business is going to make it easier to start. Once you're in business, you've got to get a firm handle on how much money am I making every month? How much money am I spending? What is my cash flow? You need a firm handle on that cash flow, again, to avoid surprises. And then finally, you want to do at least a 12-month budget to let you get an idea of where you're going to be over the course of 12 months. And again, the point is to avoid surprises. If you look at this and see down the road you're going to need an extra $3,000 or $4,000 in your business, you can start planning for that thing right now. All right? The bottom line is have a good handle on your cash flow, and it'll be much easier for you to succeed in business. I'm Tim Knox, and this completes this how-to series for the Women's Business Center.
The Women's Business Center of North Alabama, WBCNA, is a nonprofit organization whose mission is to help women and men start and grow a business and generate economic growth for the region. This is accomplished by serving as the premier source for information and access to resources, facilitating their self-discovery and personal development, and providing a mentoring process to support, nurture, and advocate the development of their business. WBCNA's services include startup assistance and nurturing, access to reduced rate services, access to financing, networking and business matchmaking opportunities, referrals to other resources, counseling and formal mentoring, executive level coaching, and business advisory boards. Specialized services of the WBCNA include the Government Procurement Assistance Center and the Veterans Business Assistance Center. For more information about WBCNA, please visit our website, wbcna.org. Get personal, create success.